Okay, so as I mentioned, we're going to start by looking at price performance. And here we are in our week on chain dashboard. By the way, you will find all of these underneath the week on chain category inside your inside dashboard. So you'll be able to get access to all of these dashboards live after the fact. So what we're looking at here, I've got two different models. So the first one here, we're looking at bull market correction. So let's assume that Bitcoin is in a bull market or an uptrend. So what I've essentially done is taken every single cycle from the cycle low all the way to the cycle high, right? Now, obviously in our current cycle, we don't really know whether this was the cycle low down here after FTX, so let's just assume that it is, right? So let's pretend that that is the cycle low. And then what we're doing is within each of these uptrends, we're going to measure what these drawdown traces up the top here is how far did the market pull back, right? So from this low point, we set a local high and then we pull back. We set a new local high and then we pull back. So what this is basically measuring is how deep are the corrections if we assume that we're in an uptrend and a bull market. Now I've got levels here for 10%, 21%, 38%. These are the Fibonacci levels just because this is a very common level that people tend to look at. So we're basically looking at how much did price pull back from the local high. Now, what you can see is that in 2023, we got down to minus 18%. That's been our largest drawdown so far. And you can see that back here, even in our, most of these have seen down to the 61.8 retracement, right? Back here in 2013, back here in 2020. These are major retracements that we've seen, right? Down to 61.8. Here we got to about 32%, right? Consistently throughout the 2015, 16, 17 bull. We've barely got down minus 18%. So far, the pullbacks in this uptrend have been historically small, which in many ways shows a quite strong performance, right? If we're just kind of looking at it from a relative basis, Bitcoin simply hasn't pulled back as angrily and as deep as it has in previous cycles. So that's just kind of a piece of information that we're going to take with us. Now, let's also then look at it from the bear market perspective, because the reality is we don't know until we hit some kind of cycle high. All of these things we kind of have to assess in a probability framework. So let's look at things instead of from the cycle low, let's look at it from the cycle high. And instead of looking at bull market corrections and pullbacks to the downside, here we're looking at bear market rallies. The market trades lower and then it bounces, and then it trades lower and then it bounces. Same levels, we've got the Fibonacci levels. So we're basically looking at how much has Bitcoin rallied off the local low rather than pulled back from the local high. It's the inverse. Now, the big picture takeaway here, we've just kind of let this model run. All of these I've curtailed when it gets to about 100%. So when you get 100% off the bottom, I basically chop off each of these different models because essentially we know what history did from there on. Now, what you'll see is that during the primary bear, we get these large-scale decays, right? The drawdowns get deeper and deeper, and the bear market rallies get weaker and weaker. Basically, the bears are completely flushed out. Sorry, the bulls. The bulls are flushed out. They've got no juice. And we just kind of decay down towards this very sad, there's no rallies. All the bull market energy just dissipates. That typically happens near the bottom. Literally, seller exhaustion. You've got to this point where there is just nobody left who is positive. And when nobody is left who is positive, generally speaking, these kind of moments tend to mark cyclical bottoms. So we get this decay in the strength of the bulls until we finally explode out the other side. You can see this big V shape. This is essentially a recovery that what we've seen in previous cycles, again, considering we don't know the future. However, this V-shaped recovery, kind of the explosiveness and the power that we've seen in the 2023 rally, it has many similarities to what we've seen in previous bear cycles. That was kind of the end of that bear cycle. So again, we don't know the future, but the pattern of behavior, the pattern of price performance, we've got very, very little in terms of drawdowns and quite remarkable performance out the other side. So in many ways, we stitch these things together. It's at the very least giving us a couple of pieces of data that this recovery may in fact have some legs to it.